Hi everyone, you have only $1,000 to invest and you want to invest in stock, but you do not know which is better, to invest in stock or to invest in stock options. Hey, this is Lily and I'm a retiree trader and I provide options training especially to retirees who fear that they will outlive their savings by helping them to become financially independent so that they do not need to depend on their children. Many investors think that investing in an underlying asset is better and less risky than options. But is this really true? Now, let's find out by using a couple of examples for direct comparison. Let's use BAC, Bank of America stock. Why I use BAC is because this is a stock that is held by Warren Buffett. And we all know that Warren Buffett is a value investor and he invests only in good businesses. Likewise, as stock option trader, especially when you want to buy a core position, it is very important to be doing it on good businesses as well. Why? When the business is good, the stock price will trend up. Now let's look into it. BAC, January 2021. Last traded price, $32.86. But with $1,000, we can buy 30 shares of BAC. However, we can also consider buying a call option. With a long DTE, that is, expiry in Jan 2023, days to expiry is 743. At a strike price of 32. Why? Because the last traded price is 32.86. So you don't want to be doing a call position with a higher strike price. And you pay 592 or equals to 592. Why? Because for one option contract, it is 100 stocks. So 592 is for one stock. So times 100 is 592. Fast forward to 8 months later, August this year, BAC last traded on 25th August was 41.48. So if you had 30 shares and you sell it off at this price, your net profit would be 258.60 cents. Pretty good. The profit is 26.22%. However, if you had a call position, you can sell it off at $11 when you close the position and you net off what you have paid, your profit is actually 508, which is a whopping 85.81%. So you can see that it is powerful. For a low investment capital outlay of 592, the profit is way higher. So it is actually low risk and high return. And another thing is that if you had purchased a share, if BAC drops down to 0, you would have lost 985.80 cents. However, if you had purchased the call option, your loss is only 592. So it's actually low risk, high return. Let's look at another stock. Kroger. Last traded 31.82. If you have $1,000, you can only buy 31 shares. However, if you do a call, long DT again, strike price of 30, you pay $560. Fast forward, traded August 25th, the last price was $45.75. And if you sell off 31 shares, your profit would be $431.83 or 43.77%. This is way above what the bank offer. The bank offer only 0.05 interest a year, right? And if you were to close your buy call position and sell it off at 17.50, wow, your profit is 1190, which is actually 212.5%. So with a small capital outlay, our risk is low but the return, you can see it's high. For just 560 of investment, the return is actually 212%. Now, this is another alternative. Let's say with the $1,000, you want to combine. You can buy 12 shares and buy a call position. And for your shares, you can sell it off at 103.44. And for your buy call, you can close it by selling off again and profit 508. So your combined profit for this combined purchase and option position is actually 611. Alternatively, you can combine both buy call for BAC and buy call for Kroger. However, you can see that the premium for both are above $1,000. So if you decide to combine these two positions, you need to top up $152. But when you close them, you look at the profit. It is 147.4%. So if you had $1,000 and you know how to trade using options, you can actually profit not just one time, but many times with a buy call position. Because with strong stock, when you buy, it is always trending up. The high gets higher, the low gets higher as well. So after you buy, you wait for the stock to go up. Once it reaches up, you sell. When it comes down, you buy it again, and then goes up, you sell, comes down, you buy. So you can actually trade up and down many times, and you can actually grow this account pretty quickly. But there are some pointers to take note for buy call options. Just a reminder, always do it for good businesses because the stock prices will always trend up. It may come down occasionally, but in the long term, it will always trend up. That is why I mentioned to buy a long call position. This buy call option is not suitable for big stock because big stock, the prices trend down. And for buy call, always remember you must close the position by selling it off no later than 1 to 0 days before expiry. Otherwise, you would lose 100% of what you paid in the premium. However, if you had purchased the stock, the only beauty is that there's no expiry date. You can hold it for the rest of your life. I trust you have gained much from this video. So I hope you can like and subscribe to my channel, and I'll see you in the next video. Bye.